More than $1 billion. That is how much money the IRS is holding right now that belongs to everyday Americans, a huge share of them seniors, and almost none of them know it's there. That money has an expiration date. And once it passes, it is gone. The government keeps it legally, and you can never get it back. I want you to sit with that for a second. $1 billion. From a single tax year. Money people earned, money they overpaid, money the law says is theirs, just sitting there, quietly counting down to zero. If you are 65 or older, or you're getting close, there is a real chance some of that money has your name on it. And today, I'm going to show you exactly how to find out, and exactly how to claim it before your window closes. I'm Masha. I've spent more than 20 years helping American retirees protect their benefits and their money. No jargon, no scare tactics. Just the real rules, explained the way I'd explain them to my own mother at her kitchen table. In the next half hour, I'm going to show you 4 tax breaks that people over 65 routinely miss. I'll show you who qualifies, how much money we're really talking about, and the 3 simple steps you need to take to claim what's yours. All of it free, all of it official, straight from the IRS. And stay with me until we get to the part I call the one-way street. Because that's the single most important thing in this entire video, and it's the mistake that even careful people, even folks who think they did everything right, still make. It is quietly costing seniors hundreds, sometimes thousands of dollars. I'll get to it, I promise. But first, let me tell you about Robert. Robert is 68 years old. He lives in Ohio. He worked his whole life, 31 years at the same manufacturing plant. He's not wealthy, he never was. He gets a modest Social Security check and a small pension, and between the two of them, he brings in a little over $20,000 a year. Now Robert is a careful man. He pays his bills on time. He keeps his paperwork in a folder in the kitchen drawer. He's the kind of person who reads the instructions. But Robert made one assumption, just one. He figured that because his income was low, and because most of it was Social Security, he didn't need to file a tax return at all. "I don't owe anything," he told his neighbor. "Why would I file? There's nothing to pay." And here's the painful part. Robert was right that he didn't owe anything, but he was completely wrong about what that meant. Because "I don't owe anything" and "I have nothing to claim" are 2 totally different things. Robert had money waiting for him. Money the IRS will only hand over if you file a return to ask for it. The IRS does not mail it to you. It does not call you. It does not knock on your door. You have to claim it. Robert had a little bit of tax withheld from his pension every month. That was his money, overpaid. He also qualified for a credit for older Americans that he'd never heard of. Added up, and Robert was leaving real money on the table, year after year, just by not filing. And the cruelest part of Robert's story? There's a clock running. The IRS gives you 3 years to claim a refund. After that, it's gone. Permanently. So every year Robert didn't file, an older year quietly expired. That money didn't go to Robert. It went back to the government, and he can never get it back. And Robert is not alone. The IRS itself reported that more than $1 billion in refunds went unclaimed for just one tax year, because people simply never filed. Over 1 million people. Many of them exactly like Robert, careful, honest, hardworking, and convinced they had nothing to claim. So let's make sure you are not the next Robert. Let me walk you through the 4 tax breaks you need to know about. Slowly, clearly, one at a time. Here's what the IRS actually says about the first one. There is a brand new deduction for seniors. It started with the 2025 tax year, and it runs through 2028. If you are age 65 or older, you can claim an extra $6,000 deduction. And if you're married and both of you are 65 or older, that's $12,000 between the two of you. In plain English, that means $6,000 of your income suddenly doesn't get taxed. Now a deduction is not a check. Let me be honest with you about that, because I never want to oversell. A deduction lowers the amount of your income the government is allowed to tax. So what does that actually save you? Depending on your tax bracket, That $6,000 deduction can put somewhere between $700 and roughly $1,400 back in your pocket. For a married couple, it can be more. That's real money. That's a few months of groceries. That's a furnace repair. Now there's one catch, and I want you to hear it clearly. This deduction starts to shrink if you make more than $75,000 a year on your own, or $150,000 as a couple. So this one is built for everyday retirees, not the wealthy. Here's the good news. You don't have to apply for it. The IRS adds it automatically when you file and you tell them your age. But, and this is the whole point of this video, it only happens if you file. No return, no deduction. So what should you do because of this fact? Make a note. If you're 65 or older, you file a return for 2025, even if you think you don't have to. That one sheet of paper unlocks this deduction. The official rule on the second one goes back further. Separate from that new deduction, the tax code has always given people 65 and older a bigger standard deduction. In plain English, the standard deduction is the chunk of income everybody gets to subtract before they're taxed. No receipts, no proof, it's just yours. And when you turn 65, that chunk gets bigger. Automatically. It stacks right on top of the new senior deduction I just told you about. So picture this. You've got your regular standard deduction, then you've got the extra amount for being 65 or older. Then, for now, you've also got that new $6,000 senior deduction on top. 3 layers. All of them shielding your money from tax. Most people have no idea they're entitled to all 3. What should you do? When you file, make sure your date of birth is correct and that you've checked the box showing you're 65 or older. That little box is worth real dollars. Here's what the IRS actually says about the third one, and this is the one almost nobody has heard of. It's called the credit for the elderly or the disabled. You claim it on a form called Schedule R. It's for people 65 and older, or for people who retired on permanent and total disability. In plain English, this is a credit, and a credit is even better than a deduction. Let me explain the difference because it matters. A deduction lowers the income you get taxed on. A credit lowers your actual tax bill dollar for dollar. If you owe $500 in tax and you get a $500 credit, your tax bill is now $0. Now I'm going to be straight with you because that's the only way I know how to do this. This credit is real, but it's modest and it phases out pretty quickly once you factor in your Social Security and your income. For many people, it comes out to a few $100s, often up to around $750. But here's the thing. For someone living on a fixed income, $750 is not modest. That's a real number. And the only way to find out if you qualify is to look. What should you do? When you file, ask about Schedule R, or have whoever helps you with your taxes check it. It takes 5 minutes to find out. And the fourth one is the Saver's Credit, on a form called Form 8880. Now this one's for folks who are still putting a little money away into a retirement account, a 401k, an IRA, something like that. Maybe you're 65 and still working part-time. Maybe you're 62 and still saving. The official rule is that you can get a credit worth up to half of what you put in, on up to $2,000 of contributions, $4,000 if you're married. That's a credit of up to $1,000 for an individual, $2,000 for a couple. In plain English, the government pays you back, in the form of a tax credit, just for saving your own money for retirement. It's one of the most generous deals in the whole tax code, and it's one of the least claimed. What should you do? If you put any money into a retirement account, ask about Form 8880 when you file. Now here is the part that most people, including a lot of financial advisors, get completely wrong. I call it the one-way street. Listen closely because this is the whole game. When the IRS owes you a refund, you have 3 years to claim it. 3 years from when you would have filed. Miss that window and the money is gone. The IRS keeps it, legally. And here's the part that stuns people. There is no penalty, no warning letter, no phone call telling you the clock is running out. It just quietly expires. The IRS's own words are about as cold as it gets. You can't get a credit or refund if you don't file the claim within 3 years. After that, it's over. Permanent, irreversible. Now, here's the part that should make your blood boil a little. Flip the situation around. Imagine you owe the IRS money instead. Is there a 3-year clock that wipes away what you owe? No, there is not. If you owe them, the interest keeps running, the penalties keep stacking, and they will come find you years later. So think about what that means. When the money flows toward you, there's a deadline, and you lose it if you blink. When the money flows toward them, there's no deadline at all. It is a one-way street. The clock protects them, not you. That's not a conspiracy. It's just how the rule is written, but it means the responsibility is entirely on your shoulders. Nobody is coming to remind you. And that is exactly why more than $1 billion expires every single year. People assume someone will tell them. Nobody does. So what do you do with this? You act now. You don't wait. Because somewhere in that pile of expiring money, there may be a piece with your name on it. And the clock is already running. Which brings me to your action plan. 3 steps. Just 3. Because I want you to actually remember these and actually do them. Step 1. Check whether you should be filing. Even if you think you don't have to. Go to the official IRS website, irs.gov, and look up, do I need to file a tax return? Or, even easier, do step 2. But the mindset I want you to start with is this. Low income does not mean nothing to claim. If you've had any tax withheld, or you might qualify for any of those credits, you file. This costs you nothing and takes about 10 minutes to figure out. Step 2. Get free help. Real, official, IRS-backed help. From people who do this for seniors all day long. The IRS runs a program called Tax Counseling for the Elderly, or TCE. It is completely free for anyone age 60 and older, and the volunteers specialize in exactly this: pensions, Social Security, retirement income. You can find a location near you at irs.gov by searching Tax Counseling for the Elderly. Do not pay a storefront tax shop hundreds of dollars for something these trained volunteers will do for free. This is one of the best-kept secrets in the country, and it's yours. Step 3. And this is the one most people skip. So please don't. Check the last 3 years, not just this year. Remember that 3-year window? If you didn't file in the last couple of years and you should have, you can still go back and claim that money, but only if you act before the clock runs out. You do that with an amended return called Form 1040-X, or by filing the past return you missed. Bring those old years to your free TCE appointment and ask them to check. If you skip this step, any refund from those older years could expire for good. And once it's gone, even the IRS can't give it back to you. So check all 3 years. That one move is where Robert lost his money. Don't let it be where you lose yours. Now before you go, do me one quick favor. Drop a comment below and tell me, did you know about these tax breaks for seniors? Just type yes or no. I read every single comment, and I reply to as many as I possibly can. I genuinely want to know how many of you had heard of that one-way street rule, because in my experience, almost nobody has. And here's the bigger ask. If you have a parent, a sibling, a neighbor, or a friend who is over 65 or living on Social Security, please share this video with them right now, today. That share button is right below this video. It costs you nothing, and it could put hundreds or even thousands of dollars back in someone you love's pocket before their window closes. You might be the only person who ever tells them. If you're not subscribed yet, hit that subscribe button and turn on the notification bell. I post new videos every Tuesday and Friday, breaking down exactly these kinds of rules: Social Security, Medicare, taxes, pensions, because they change constantly, and you deserve to hear about them in plain English, from someone who's actually on your side. And in my next video, I'm covering the Social Security rule that can withhold your entire monthly check, your whole payment, if you earn even $1 over a certain limit while collecting early. It affects millions of seniors who are still working, and almost none of them see it coming. Click right here to watch it next, before it catches you off guard. I'm Masha. Take care of yourself, take care of your money, and I'll see you in the next one.